On the 4-hour chart, the stocks found footing and are rallying towards the records. So far, the high-yield bonds just made a new all-time high, and I think this is good because it seems like the high-yield bonds are leading the stocks higher. Dollar also has avoided meltdown, complete meltdown for now, and gold is taking advantage of it as it approaches records. We will also revisit oil as it broke critical support and it could still collapse very easily. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, December 19, 2025. As always, please like, share, make a comment on this video. This is what makes this channel, this is what keeps the channel going and also helps promote this video. If you're a subscriber, stay tuned. Again, we can see we have quite a busy members-only video. Bitcoin, treasuries, some of the ETFs, large cap stocks such as Nvidia, for example, Boeing, Meta, as well as a whole bunch of speculative securities such as Beam Therapeutics, Medical Properties Trust, LegalZoom, Tyson Foods. Not really a speculative security, but the pattern is there. And some of the gold related are going to be covered in members only section. If you're not yet a subscriber, consider signing up by going to MasterChartsTrading.com and signing up there. Let me briefly actually change the pattern here, and let's look first at high yield bonds, J and K. So as I have repeatedly pointed out about the reason why I care about high yield bonds is because of this, this is high yield bonds, ticker symbol JNK, is because of this lower part of the chart, this yellow part. This is showing correlation to the S&P 500, and you can see that correlation of S&P 500 and high yield bonds is extremely high. Vast majority of the time it's positive. In other words, when stocks go up, high yield bonds also go up, and vice versa. Now, high yield bonds, junk debt just hit an all-time highs. So right there today, we just hit a record high for high yield bonds, whereas S&P 500 has not yet hit a record high. So notice that the S&P 500 actually hit a record high back in October, and 29th of October here, and so far we have not seen a new record. Dow Jones did hit a new record, by the way. So that's kind of good news, but as far as S&P, we haven't. Now that high yield bonds yet again hit a record, I think it's only a matter of time before stocks also do the same thing. Looking at a more granular charts, this is a 4-hour chart, okay, and this is a continuous security. This is ticker symbol US 500 from Capital.com. Pepperstone also is a good option. So S&P 500 from the Pepperstone or Capital.com are all very good ideas because they show complete picture. So there is not only the normal session data here, but also data from the after hours and overnight sessions as well. So looking at this chart, you can see that I have my lines here, this green, blue, red, and yellow lines, for which you can find out more about. But notice this breakout that occurred here on November 25th. And then since then, we've basically been trading above this blue support resistance line. We did come down towards it just a few days ago here in 16th of December. But notice again that we're basically rallying off of it. And I think the latest hit was actually pretty successful, and I think again we could easily break out to new records, and I just showed that high yield bonds are making new records, so S&P 500 should probably follow very soon as well. So if you are a shorter term trader and like to trade, for example, S&P 500 futures or some people, what I know, what they do is, let's say they go to 5-minute chart. So 5 minutes, each candlestick is 5 minutes worth of activity. They put on my indicators. They don't forget to choose continuous security. You know, don't choose an index. You can see there are gaps here Yeah, and the chart looks completely different, no gaps. So you need to have, if you're trading intraday, like for example you're trading euro versus US dollar, there are no gaps. Yeah, it just continuous security all the time, non-stop. So let's just say that you are indeed trading S&P 500 on 5-minute charts. Well, there you go. There's the breakout. You can see it clearly on this chart. Okay, so right there. All you need to do is to have my indicators. Okay, and then you got a nice run right there. So this is the way we trade on intraday chart. For my newsletter, I normally don't trade intraday, so like less than one daily candlestick. So each candlestick is a day's worth of activity, 1 day. But if you're trading intraday, then a little bit different rules apply, and if you need those rules, I can provide them. But for normal everyday trading, daily charts are much easier. So in other words, you trade once a day. At the end of the day, you make a decision: do you want to buy, sell, do nothing? And that's how we trade basically. So for S&P 500, to recap, high yield bonds just hit records. S&P 500 will very likely hit records relatively soon. We're currently looking at the US dollar currency index, ticker symbol or their symbol DXY on TradingView.com. This interface is called TradingView.com, and my indicators are available for TradingView.com. For now, so dollar is still in a downtrend. It began as downtrend in March of this year. These are 3-year lows right here on the September 17th of this year. Several times we attempted to rally, dollar attempted to rally, but these August highs have proven too much for the mighty dollar, and 2 times right there, you can see one in 5th of November, another time in late November, we tried to rally above it, we failed, and the latest one was actually pretty bad. We sold off way below into the below the yellow line. However, so far we have avoided like a complete collapse. I thought that once we break below this yellow line, we might actually just unravel completely. We haven't done that yet. In fact, today we're back above the yellow line, but honestly, this is a very weak chart still. There is really, it's just still a downtrend. However, the only good thing I can say about this chart is it's somewhat oversold. Because let's say that you are selling it short here back in April. You had a nice run, but really there was no follow through besides this 3-year low. So if anything, we could see like a rally. I was actually expecting this back in September into November, but it failed. So I was expecting a rally towards the red line. So far we haven't gotten it yet, but I think it's possible that we get that rally, and if we do, then in a second I'll show you gold and why gold might come under pressure as a result. For now, dollar seems quite weak. The only bright spot that I see is against the US dollar versus Japanese yen. In this case, US dollar is actually winning. So a US dollar divided by Japanese yen, you can see that this currency pair, USD versus JPY, is in favor of US dollar. In fact, we're approaching 52-week highs, I believe. Yes. So the dollar currency index is composed of several currencies, including the Japanese yen, but the vast majority of this currency index, DXY, the ticker symbol DXY, is euro. It's like 50% of this equation. So gold divided by US dollar is a security that you can trade. Let me rephrase it. In United States, you cannot trade this, but in some parts of the world, in most parts of the world, you can. In the United States, you have to trade an ETF called GLD, which is not bad. It follows gold pretty closely, but it's not the same. As I just pointed out, for example, if we go to 4-hour chart, for example, for GLD, you can see there's a gazillion gaps here. But if we go to 4-hour chart for XAU USD, gold divided by US dollar, there is no gaps. Okay, so that's why I'm not a big fan of trading this as a forex instrument. But for our purposes, we need to look at it because we do trade gold and gold miners. So gold divided by US dollar, as I just showed you, has been getting weaker, progressively weaker and weaker, and gold took advantage of that since this latest leg up from mid-November, approaching records, very close to records. In fact, gold miners GDX just hit records. They're the all-time highs. So GDX gold miners in general have been outperforming. If you took advantage of my lines, of my indicator lines, there's the opportunity where I'm hovering 15th of May for a whopping 90% gain to date. So congratulations if you opened recently, and I would probably continue holding because it seems like we're still going higher. Finally, I wanted to touch upon crude oil. Last week I pointed out this October low, and I said that if we break below that, we could be staring into the abyss for oil. Currently, oil is around $56. If indeed what I'm saying will come to fruition, we could see oil in the mid-30s. Why? Because of this pattern. So this is a kind of like a, I don't know, inverted triangle, I suppose. Probably best to show it on the weekly chart. It's probably easier. There it is. So I'm going to just disable my indicators for a second. So there's that pattern that I just showed you on the daily chart, kind of like that. And if you want to, normally when you estimate this type of moves, you need to sort of see, okay, so this is a, I don't know, triangle pattern of some sort. If you measure the depth of this pattern, right, that's about $22 pattern, or 28% pattern. So this type of thing usually gets duplicated in the downside once it's broken. So this is where I'm getting this mid 30s kind of, mid to low 30s kind of idea. So where is that price in relationship to previous prices? And this is where I'm talking about the 2020 low right there at around $34. So I think this is a very legitimate target for oil just from this pattern. I think we have a lot of oil in the world. So I think the reason, obviously price is not just determined by desires of people, it's more determined by supply and demand. And if we have more supply than demand, prices drop. So I think this is what's happening. We have not yet broken below in a convincing way. In fact, I'm going to show you this latest. This is a weekly candlestick, W. So each candlestick is a week's worth of activity. So notice this tails. We got 1, 2, possibly 3, 4 in this area here, somewhere between 56 and maybe $54. So repeatedly we've been trying to kind of bottom in that area. What I think could happen again if we break below this lows, and we need to see a convincing close below this lows. Right now we're just seeing lows around this lows, but I want to see a close below it, and so far we haven't actually seen it. So we might still rally. It's possible, but the way this pattern is panning out, we could just collapse. Again, the reasons for that could be because we have too much oil, or because the demand collapses as well. I don't see demand collapsing. I do see supply not decreasing, or possibly even increasing further. What do you guys think? Let me know in the comments. Other than that, head over to MasterChartsTrading.com, click on sign up. So if you're looking for the indicators, these trading indicators are available, these green, blue, red, and yellow lines, which you can use to make decisions pretty much on most time frames if you use the right security. These are available for TradingView.com. You can sign up on my site. Then once you send me the user ID for TradingView, you can have it on your chart on TradingView. On TradingView, you only need a free account. You don't really need a paid account. So my indicators will work on your free account. I also send out newsletters daily and the weekly members only newsletter. So for example, this week we'll be covering lots of ETFs, large cap stocks, speculative securities, and some gold related in a members only video that is coming out in a few minutes. And of course, the best deal is to get both trading indicators and newsletters on a yearly subscription plan. If you compare the yearly and the monthly subscription, you get 2 months free on the yearly subscription. So it's a no-brainer. You definitely want the yearly subscription. If you have any questions, let me know. Make a comment, like this video, share this video. Thank you for watching, and have another great trading week. Bye-bye.